What is going on, traders? Welcome back to the Traveling Trader. So I wanted to talk about two exciting IPO opportunities that are launching this week. That would be Palantir and Asana. Now, Palantir doesn't come without its controversies, obviously. It is a big data analytics platform, and it is fairly secretive about its clients and the data that it provides to its clients. Some of their clients are in the security sector, both public and private, and they contain a lot of users' data. But this is a trading channel, and I'm not going to speak to the ethics of the company or lack thereof, or pass any sort of judgment, but I am going to tell you whether I think you should buy Palantir stock from a trading perspective, how I would trade Palantir stock, and give some information as to their IPO listings. Both Asana and Palantir are doing direct listings as opposed to the traditional IPO route where they raise funds and go through an underwriting firm. Slack and Spotify are the two highest profile companies that did this recently. Now, Asana is a project management platform essentially. It aims to streamline the work tracking process and distance itself from the rigid reputation that something like Microsoft Project has. So just to recap, first, I'm going to go over the information about the IPOs themselves, when they are direct listing, and then we will get into the charts and I'll let you know whether I think you should buy Palantir and Asana stock, and if you do, how you should trade them. We'll also cross-reference this with charts and data that we have on previous IPOs like Spotify and Slack, as we mentioned, but also more recent IPOs like RPRX, Rocket, Lemonade, and Snow. So let's get right into it. All right, guys, back at the desk. So you see here on thestreet.com, it has the IPO listing dates. It has actually a pretty cool IPO calendar. And you'll see here that Palantir and Asana both are set to direct list on the same day, which is Wednesday, September 30th. And they will be available at market open because it is a direct listing. Now, real quick, what are the fundamental differences between an IPO and a direct listing? Well, basically, an IPO, the company will use an intermediary like an underwriter who will facilitate the IPO process and charge a commission for their work. New shares will be created to offer to the public, and that's how they raise additional money. And usually there is a pre-listing offering that is not available to the layman, but available to big whales, basically. Just how Warren Buffett was able to buy a large amount of Snowflake before Snowflake actually hit the stock exchange. However, with a direct listing, no new shares will be created, and outstanding shares will be listed on the market at market open with no underwriters involved, allowing for a more natural price discovery because the underwriters aren't setting an IPO price. You might have seen that with Snowflake, where initially, it was thought that Snowflake would be around 75 bucks, I think, and then it went to 100, then 110, and then, finally reached 200 something dollars, something outrageous by the time it actually hit the secondary market available for trading. Now, why would a company choose to do direct listing versus IPO? Well, it offers greater liquidity for the existing shareholders. There is no vesting period, right? There's no lockup agreement, so they can essentially, the original shareholders can sell their shares whenever they want. It would enable market-driven price discovery, and also they save a lot of money by not going through an underwriter, which would usually charge somewhere between 3 and 7% a share. So Palantir is expected to fetch around a $22 billion valuation, which puts it at around $10 per share. And according to thestreet.com, Asana's price per share will be around $28. Now, both of these companies have a pretty healthy revenue and a long list of enterprise customers, but they haven't turned a profit yet. However, they have enough revenue where they feel like they don't need to raise money by doing an IPO, and they are both really bullish on their long-term growth. Palantir actually gave guidance for the rest of the year. They said in the third quarter, it expects revenue to rise 47% to around 278 million. For 2020, it expects revenue of about $1 billion, which is up 42% from the previous year. All right, so let's get to your favorite part. How should we trade this? And by the way, if you get anything out of this video, leave it a big fat thumbs up like this one that you see on the screen here. Leave it in the comment section below. Let me know if you're planning on buying Palantir and or Asana. And if you want access to all of our trade alerts, link is in the description below. We have over 800 traders in the community talking strategy, options, stocks, entries and exits and watch lists, etc. It's a great value. Link is in the description. All right, so let us take a look at a few of the recent IPOs, because as you know, I'm a data guy, I'm a research guy. I like to look at these things from an objective perspective and try to see if we can notice a trend. And if we take a look at Slack, Spotify, which we had a great options play on, by the way, Rocket, RPRX, and Lemonade. If we take a look at these, in addition to a lot of the other IPOs, but we have to focus on, a manageable set, you'll see that initially the IPO on the first day, this is the weekly chart, but on the first day or two, there's a lot of hype around the IPO, and you get these tall wicks, right? These tall green wicks on the first days. Rocket was the same way, essentially on the first day. Actually, Rocket had, you know, an increase of about 20%, and then it continued to about 50% the next day before seeing a retracement. RPRX, same thing. You had about 3 days of growth. Lemonade, same thing. You had about 2 to 3 days worth of growth. And then Snowflake, you see this insane tall green wick here. Snowflake's intraday range for that day was, you know, 40% from the bottom to the top. So why is this important? Well, it's because we will likely see the same trend with Palantir and with Asana, where on the first day you will get, you know, an opening and some pretty intense hype buying. And then those who are smart will start taking profit at the top and literally dump their shares on the FOMO buyers. So this is what I plan to do at market open. Try to get as close to the open as possible on both Palantir and Asana. And then obviously nobody knows how far the hype is going to go. I mean, you see with Slack, this wick lasted, in terms of percentage, was about a 9% gain on the day. On Rocket, as I mentioned, we had those 2 days of growth, etc. So there isn't really a formula for when to get out, but you should start recognizing when the sell-off is happening, and you should be okay with whatever profit you collect at that time. If you're going to be engaging in this extremely speculative play, this day trading play really is what it is, then you can't lament any profits that are left on the table. We also don't know if the rally is going to last for a few days like it did on RPRX, or if it's just going to last a couple of days like it did on Rocket before seeing a decline. Now, one thing is for sure, though, is that most IPOs in the early stages, in the early weeks, will see a tanking from the IPO price. Here is Work, for instance, well, or Slack, but Work is the ticker symbol. You see that Work, from the highs of that first day, tanked to about 65% before it reached the swing low and then climbing back up again. Spotify, if we take a look at its, you know, at the weekly chart, after its rally, it tanked another 50% before, you know, seeing some range bound trading and then a massive rally, and we're now at 242. If you take a look at Rocket, same thing. From highs to lows, Rocket saw a almost 42% decline. RPRX, same thing. From high to low, you see a decline of 32% almost. Lemonade, I mean, this is just a trend. I can keep going here. Lemonade, from high to low, you see a decline of about 55%. And on Snow, you see a decline from high to low of about 35%. So one thing is for sure, that most likely, obviously we're not fortune tellers, but we can go over historic data. Most likely we will see a drop after the initial rally. Now, because of the low price of both of these, one is expected to IPO at 10, the other one's expected to IPO at around 28. There could be a chance for much more hyperbolic growth just because of this psychological low price and the fact that dollar increments represent a large percentage of the total stock price versus something that IPO'd at $150 and dollar increments don't really represent that much in terms of percentage. So just to recap, what I plan on doing is trying to buy at the open as soon as possible, selling at any major rally. You could even set a trailing stop loss so that, you know, once you lock in a certain amount of profit that you like, you could set a trailing stop loss so that if it keeps going up, you catch the rally. And then once it starts declining from there, you essentially would exit for profit. Now, this is a very speculative play. You need to make sure that you don't have any pattern day trading strikes on your account or that you're eligible to even day trade. This is strictly to take advantage of the hype that you see around high profile IPOs on the first day or two. It's not really, you know, growth investing or value investing of any kind. And then I would wait to see a major decline on any one of these stocks before jumping in for the long term. I generally don't like to buy IPOs for the long term because price discovery hasn't taken shape yet. And again, I'm all about charts. I'm all about data. You want to see price discovery take shape before knowing what's a good support level or resistance level based on market sentiment. So that's really it for this. If you want, subscribe to the trade alerts for all of our trades. Like I said, that Spotify trade, absolutely killing it at the moment. We have the 237.5, 232.5 put spread on Spotify. It looks like this. Got almost half of the full $5 for the spread up front in premium. All we need Spotify to do is expire above 237.5. And although the market has been pretty shaky this week, we've absolutely been killing it. Facebook is up 81%. We have our AMT option that was up 50%. Our Tesla options up 51%. STZ, which I closed this morning for 75% profit. We had an SPG straddle that I closed for 15% profit. But yeah, if you want the full gamut of my options trades, stock trades, crypto trades, the link is in the description below. Subscribe to the channel, hit that notification bell, hit that thumbs up if you get anything out of this video. Leave it in the comment section below. Let me know if you are trading any of these IPOs, and if you trade IPOs in general. Stay safe out there, traders. Peace.